Rabbi. Welcome to Wall Street Hackers, one of the most popular programs on the Pod TV network. And this is the stories that we discuss, of course, are the markets. And then we also look at the stories of the week. We look at the quotes of the week. And of course, we see Peter's pick plus a panel discussion. We go through this every week. So thanks for joining us in the United States of America and, of course, around the world. And with that, we're bringing the hacker himself, who is a graduate of UCLA, where he received his degree in economics, his law degree from the University of Miami, and his master's in business administration from NYU. Afterwards, he spent 17 years on Wall Street studying stocks. What else would you do? And with that, we're going to peer into the world of stocks and the markets with none other than the hacker himself, Peter Bennett. Peter, welcome to your own show.
Oh, thanks, Nick. Pretty good introduction considering you had a little bit of a sore throat.
Yeah.
So welcome to Wall Street Hackers, November 11th, 2025. Sorry, but we've been beige the last few weeks. I'm not really beige. I'm more pink than beige. Anyway, you can catch a new episode most weeks starting on Tuesdays at 6 p.m., depending on your distribution channel. We always begin with our markets, and that's 6 p.m. Eastern time, if I didn't say that. So we always start with our market report, and this week I decided the selected quotes of the week will do most of the job. Of course, these are quotes that Wall Street Hackers I agree with generally. You know, people do that. They search for information that agrees with them in general. So these are my perspectives. Quote one, and these are mostly exact quotes, maybe a little edited here or there. Quote one, inflation picture is not pretty. The Fed should worry. The disinflationary trend in services prices has ended at the level above 3%. The deflationary trend in goods prices has ended, and now the goods inflation is also rising. Given that energy and food prices are also rising, the Fed should be worried despite the falling rent inflation. We mentioned this last week, by the way, that it was rent inflation that really drove it down, not everything else. The stock market bubble is likely to continue to deflate as the Fed remains hawkish. Again, these are things we've been talking about forever, that the market just assumes everything's going to go smoothly, the Fed's going to drop, but it has a problem with inflation too, not just unemployment. But in the end, it'll probably prioritize unemployment more than that. But that doesn't mean everything's going to work out perfectly. Quote number two from Wolf Richter, November 5th, 2025. Private sector growth, job growth lumbers along after getting hammered by the 24 benchmark adjustments in September and August. According to payroll processing firm ADP, the private sector created 42,000 in October. After 2 months of decline, the annual adjustment has turned the small growth in September of 11,000 into a job loss of 32,000, which today was revised to minus 29,000. And so we have not a terrible job market, but a slowing job market. Next quote from Brett Jensen, also November 5th. U.S. economy a dismal outlook if the AI narrative falters. Equities remain resilient despite some negative headlines, with stocks hitting record highs, even as political dysfunction is becoming all too evident. We'll be discussing political dysfunction in our discussion of the week in this recent shutdown. The current market rally is narrowly driven by AI-related spending, highlighted by a vendor financing circle that has become quite apparent. Now, that's a really good point. I'm hearing more about that. It's like AI supporting AI, and money transferring around, creating revenues. U.S. GDP growth appears robust, fueled by AI tech spending and the wealth effect among the top 10% of consumers, but broader economic engines are lacking. If, and that's a big if, but if the AI narrative falters in 2026, and it has been really weak in the last few weeks, it is hard to see how the U.S. economy doesn't avoid at least a mild recession. And finally, again, this was not necessarily true, but it's interesting and unusual. New York Post, November 5th, 2025. Stocks fell Tuesday. This was a little while ago, but not long ago. as the CEOs of Goldman Sachs and Morgan Stanley, not probably people who are too ignorant, warn that markets are due for a correction, adding to investor fears that AI stocks have become overvalued. But the Goldman chief added that the bank is still advising to stay invested for a long haul. Yeah, in the long haul, you always make money. So no surprises to Wall Street hackers in terms of a lot of these different reports. We've been saying for a long time, AI, and this first part is obvious. AI has been driving the market for years now. But if you look at the rest of the market, it's really performed poorly. As a matter of fact, maybe next show or one of these shows, I'm going to look at SEHD, which is a really generally strongly performing dividend mutual fund that I've owned at times and even recommended at times. But it's performed mediocre to poorly over the last few years. And it's got really quality dividend growers, but it's not AI. And AI has been supporting everything. So two concerns about Wall Street hackers we often mention. Number one, a very credible study that showed that 95% of companies investing in AI are receiving zero returns. That doesn't sound good. These are companies putting billions of dollars in it and getting nothing. And of course, my personal experience, which probably every viewer has had, which is you get on the phone to talk to a company and you get AI and it drives you crazy. It's like, just get me off, get me a person, get me a representative. And it barely understands English. And there's so many errors. So I don't think it's there yet. It's not the only thing about AI that will help the industry grow, but these are serious issues that could be affecting AI, and maybe it is overvalued. Again, we're not short-term traders like that. But the other issue, which is even clearer, and it is the gigantic, unbelievable, unfathomable debt of the United States and countries around the world. We talk about this all the time. And it's fair because everybody else in the media and the financial planners are all saying, oh no, 38 trillion in debt, 38 trillion in debt. No, it's probably about 125 trillion in debt, counting the unfunded liabilities the United States has for Medicare and Social Security. And other countries around the world are in the exact same situation, meaning they have aging demographics and they're providing free healthcare or mostly free healthcare. And they haven't put money aside, or adequate money for sure. And they have underfunded retirement plans, just like the U.S. has underfunded Social Security, which is easier to fix than Medicare underfunding. But these issues are coming due soon now. I mean, soon meaning 7 years, 5 years, 10 years. Nobody knows when it really even caused bigger damage to the economy. But so what does this mean, bottom line, to you as an investor or any investor? One, government money printing and much more money printing around the world, in the United States, everywhere, is going to happen. That is 100%. I mean, the $125 trillion in debt of the United States is roughly equivalent to all the stocks, all the bonds, all the privately held real estate, and all the commercial real estate in the United States. And again, other countries are in the same situation. Basically, it's everything. They cannot tax that because they would take everything. And it's not just the money of billionaires. They'd have to take everything to pay this debt off. So roughly. So money printing is coming. And probably very low interest rates are coming because the governments need that. And we'll be talking about gold today as a hedge and why that could work either way. But the other thing is, it means very likely modest stock returns in the next decade. And this was also predicted by Schwab, Goldman Sachs, and JP Morgan. They said 3 to 6% annualized returns in the next decade. That's much lower than we've been getting for decades. So glass half full, I say, Wall Street Hacker says, there are still opportunities out there. They're extremely hard to find. They're much harder. I mean, you used to be able to throw a dartboard maybe 10 years ago, 20 years ago, and you'd make a lot of money or even more money. Everything was going up. Everything was good. But now we're coming to this debt crisis. There's a lot of other issues in the economy. And so the good news is there are still opportunities to way outperform other people in the market and other investments. So move on to the next segment. Why President Trump or someone in the White House should give me a call. They haven't, they really should. I mean, I could help. So this week, I actually criticized President Trump because I'm not a guy who just goes along with everything anybody says. So even President Trump, who is right, I would say literally about 90 to 95% of the issues. Now, this is footnote why the Democrat Party just keeps diverting. Oh, the White House, is building a fancy, thing on, on addition, as the thing. President Trump personality. These aren't perfect. I don't necessarily agree with them, but the point is they divert from the big issues like the economy, crime, and a lot of other things people care about. So let's say he's right about 90%, 95% roughly on the issues, which is really what changed the future. But here's what he said. Quote, I am recommending to Senate Republicans that the hundreds of billions of dollars currently being sent to money-sucking insurance companies in order to save the bad health care provided by Obamacare be given to people, basically. I'm paraphrasing. So this is really bad. Now, I would add to this, maybe just said it politically, because I don't know what he's thinking. So maybe just said it because it was politically something to throw off the cuff. But if he believes this, if this is serious, and there was a comment by a Republican too, in the same vein, it's like these money-sucking insurance companies. Well, here's the facts. The profit margin of health insurance companies runs about 2% of premium paid. It was in a 2024 study, 1.9%. That means if somebody pays $1,000 in premium, they get $20 to administrate the whole system. That includes any commissions paid, their staff, their rent, all these things. That's not a bad profit margin, and it's much lower than most of industries. There's a lot of industries, they make more than 2%. So you're not going to get an administration on the insurance industry by anybody, including government, for a lot less than 2%. The final point there is, with my degrees, my financial expertise, and I have a lot of experience with the healthcare system, which I've never discussed on the show, but a lot. I wrote a 30-page report on on a pathway to fiscal stability. I know this sounds bragging, but it is true. I don't think anybody in Washington could do a better job of consulting on this topic than me. I'm not going to be the head of health and human services, but I could have been in that top position, or at least a consultant. I have a lot of ideas that would help. That report had 30 pages of ideas, and maybe less than half of them were in the big, beautiful bill, especially much less than half about healthcare and Obamacare or the Affordable Care Act. So somebody should call me, but they probably won't. Okay, investment of the week. First disclaimers, as always. Wall Street Hackers is for entertainment only. These are only our opinions. There are no guarantees on any of our suggestions. Nobody can give you a guarantee on anything except for if you hold a fixed income to maturity. Consult your financial advisor. So, Wall Street Hackers, we usually prefer income-generating investments. Our studies show that's where to be. Dividend stocks, high dividend stocks, growth stocks, some MLPs, energy stocks. These are the places to be historically. This is overwhelming. But this week we discuss gold, where we have an allocation to GLD, and we had one, but we just upped it. We use the GLD Spider Gold shares as our gold holdings. So I just went up to 5%. Now, the first thought is of many people, not everybody, would be, okay, great. Gold is a great hedge against inflation, but that's not really true at all. It's actually a pretty poor hedge against inflation, and the correlation is there. So there is a low in correlation to inflation. Different studies show different ones, but the bottom line is it's not exactly a hedge against inflation at all. On the other side, during the 70s, when there was massive inflation, it was the best thing to have gold miners, which I don't do, in gold. So, and I don't do gold miners because they're more erratic, and gold is like, it won't be, in a bad time, it's not subject to a lot of issues. So it's nice and simple. So what gold can do is one, it offers an insurance policy that if there is massive inflation and you're just getting dollars or you have dollars, it might be a hedge against that. If there's massive inflation, it might not, but it's a good diversifier. And that's the key. The famous expression on Wall Street is diversification is the only ticket. So you don't want to have everything in one place. The way I figure it, bottom line, if I have 5% and I'm getting income of my investments, maybe my portfolio is generating, because we have very high investments income, especially since our number one allocation by far my favorite MPLX. Footnote, MPLX is starting to move now. It went up to about 52 from 50. I don't know if it's going to break out or not. It is the most ridiculously undervalued stock in the universe. Where do you get an 8.5% dividend with 4 years of dividend growth of 10 to 12% in what should be a pretty safe, what is a very safe utility, because it's pipeline shipping gas and oil, and especially tax advantage for U.S. investors. But anyway, so because of the MPLX, I'm getting even more than 5% on my portfolio. Treasuries pull it down a little, but they're very safe if I hold them to maturity. So the point is, though, that so over the years, if I lost half of my 5% in gold, I lost 2.5%. I made it up in with the income. The other side is if gold takes off, then it's hedged a lot of other things like the devaluing of the dollar, and there's a good chance of devaluing of all currencies because again, the countries of the world are just going to be printing money and printing money and printing money, and that is pretty much 100%. So we move on to the panel question of the week. And that brings in Nick. We won't have him be talking too much because he's just getting over a sore throat. Nick, you there?
Yes, Peter, I'm here.
Okay, there you go.
I'm thinking of gold.
Say that again?
I'm thinking of gold.
Yeah. I went up from like 2.5% to 5% this week. I don't usually follow the advice of Sasha, someone we know, but in this case, he said he was 5, and it got me thinking, why aren't I 5? You know, and other things, the trend in gold. It actually took a dip recently. So I said, and I saw a bunch of articles that said, buy the dip. Normally, I'm not a buy the dip trader, but in this case, I just don't, I don't think it going down in half or 2/3. It could do anything. It's not guaranteed, but it's a nice hedge.
Yeah, it's a hedge. Yeah,
exactly. So the question is very relevant. Was the shutdown necessary? So we're going to go into the background first. I saw you nod. Okay. So after the unprecedented government shutdown, the longest in history, 41 days, which was previously criticized when the Republicans did it, footnote, Democrats finally voted to reopen the government. Liberals in both chambers, especially progressives and the socialists, severely attacked Chuck Schumer for being weak and not holding the party together. On the other hand, the 8 Democrats and 2 independents who did vote for reopening came from generally more swing states, districts. So they had political pressure. It's like, yeah, Mr. Schumer, you want me to hold this closed forever, but I've got an election. I've got to face my public. Or maybe they just felt to do the right thing, but they could have done it before. Republicans said the entire shutdown was about politics and that it was just a very left wing of the party, which is getting more and more powerful, footnote, that was pushing Schumer, who feared being primaried by AOC or other progressives. Ironically, even now, he did his best to, keep the shutdown going, and he may get primaried out anyway by AOC and progressives. Democrats said their stance was, and this is where it'll get interesting, as we discuss it, but Democrats said Republicans wouldn't approve the healthcare subsidies, which were massive and included at least some, by the way, included a large subsidy for illegal immigrants. The estimate of that illegal immigrant package would be, if it continued, $193 billion over the next 10 years. Several Democrats went on And the press said there was no money for illegal immigrants. There was money for illegal immigrants. And it's a fact, if it continued exactly like it was, there would have been. That's a footnote. So one of the few concessions that Democrats did get was a promise for future vote on an extension of Affordable Care Act credits. But Senate Majority Leader Thune said he had offered that weeks ago, the same thing. And after, like just a day or two ago, Speaker Johnson said, it's an urgent matter for us with subsidies set to expire on December 31st. That's the COVID subsidies because the others don't, which is why we put it into the bill that we passed in the early summer, which I was shocked to read. I just saw that today. And the Democrats fought to take it out. So why did the Democrats fought to take it out in the first place? Did they want this as a political issue? I don't know. There's a lot I don't know about this because I'm not privy to the thing. But the bottom line is the government was shut for 41 days. And, it isn't clear whether there will be additional subsidies. And that's what we need to discuss, too. The necessity for it. Actually, I'm giving you a clue of where I'm going. But Nick, was the shutdown necessary?
Definitely, maybe, but probably not. Okay.
Exactly.
Here's the reason. Here's the reason why you would say you need a shutdown. You didn't need a shutdown. Okay. What they wanted to do is to bring out some of the problems that exist in the big beautiful bill, which of course is less funding for SNAPs, less funding for Medicaid. In addition to that, the lack of credits for healthcare. So that what happens is that the Democrats want to bring out some of the problems that exist. But was this the way to do it? No, because what did they do? It's like saying, I want to show you how sick I am, so I'm going to shoot myself in the foot. You know what I mean? So the thing is, they didn't have to do that. That would be my opinion. It was a really poor way to get basically a poor way to get a lot of attention. Yeah,
it did get a lot of attention for sure, and it definitely had some political aspects at least. So there's a few points. Number one, just what you said about Medicaid. I just want to clarify. A lot of these cuts anyway that were done were putting in work requirements, which to me seem reasonable. I'm not the only one who thought that. Under President Clinton, Democrats and President Clinton pushed for work requirements. If somebody's an able-bodied person, maybe they should have some pressure to get a job. But that's an aside. I'm not denying all things for Medicaid. There's a lot of people who need a lot of help. So, but this is a different question because complex question. Number one, what's obvious is it's the Democrats that passed Obamacare or the Affordable Care Act, either one. That's what it was called, Affordable Care Act. And has been a real problem. It should never have been really passed because it was a pretty good system for most people. There were tweaks that need to be added. There were repairs. But even then I knew, and I did a report then, my last report, about how the current system could be pretty simply repaired with some change in the law. I won't get into that. But and I had some attention from it, but no, not enough for sure. So the real question is that will tell us whether the shutdown is necessary or not is, will the Republicans bring some of the COVID subsidies back? And I'll quickly explain that. So the problem with what's standing now is there are subsidy cliffs. So, and as an example, a person may be making over 62,000, a single person, two people making over 80, three people, I think it's 108, four, maybe 128. And that sounds like a lot of money maybe somewhere in the country, but a lot of places it's not. And especially if you're raising a family, you could have a lot of debt from college, as an example. So the thing is, right now, the way it looks is there's going to be cliff subsidies. So that means, as an example, a person who's 60, or any person really, but this is a real example of a study I saw. 60-year-old making 62,000, pays $200 or $300. At 63,000, 1,000 more earnings, the premium goes to about 18,000. So the thing is, these cliff subsidies are devastating for the upper middle class, we'll call it. I don't know what to call it, but people making on the high end of middle class. That would be extremely unpopular with people. And this is why I think they will pass the COVID subsidies in part. And by the way, this is called a donut hole. In other words, you're making enough money where you're reasonably well off given your family structure, but you're making too much because you went over the cliff. And all of a sudden your premiums are like, I can't afford $20,000, $40,000 for my premiums because Obamacare made the rates go up so phenomenally, really 6 times. You'll hear on the press, it went up 3 times, but that's because the old premiums used to you'd have a deductible of maybe $2,500, $2,000, and now it's 3 times higher with a deductible of $7,000 or $9,000. So it's really 6 times, 7 times higher. There's definite reasons for that. We won't get into that. But the point is, you're going to slam the middle class if you don't bring back some of these subsidies. And also politically, it's going to be a nightmare. It's going to be very unpopular. So the Republicans should position it that we were always going to pass most of the subsidies. We just were going to make some exceptions. For instance, we're not going to fund illegal aliens. If they take that position and make it clear to the American public, it's a win. If they don't do anything, it's a huge loss. And if they don't do anything and they oppose it, then the Democrats had a point. I'll give them that. I think they will, but only time will tell if these subsidies come back. My guess, again, is they will in good part. But we'll know in, I guess, early December because of the 41-day shutdown, which is crazy timing. We're now in open enrollment for healthcare, and nobody knows exactly what their subsidies are. If you're making less than the cliffs, you don't worry that much about it. It's like, I'll be fine either way if I get a little extra money. But if you're over those cliffs and you're in the donut hole, you're going, I don't know if I'm going to have health insurance next year. So I think that people will have health insurance next year. Maybe the Democrats at a point. But if it turns out the Republicans, and it sounds like they did always want to include most of the subsidies, then it's just a really sleazy political stunt. And most of these, almost everything backfires on what they do, because in the end, we're in the information age, and it's pretty easy for people to find this stuff out. So we will see, if this is a crisis or if it's just a political crisis. So thanks for watching Wall Street Hackers. Feel better, Nick. I know you will. You're on the mend. You can catch a new episode, most episodes, on Tuesdays at 6 p.m. starting Eastern Standard Time, again, depending on your distribution channel. As Kim always says, get healthy, get wealthy. We'll see you soon. Bye-bye.